Omicron crashes the stock market. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. Grab your stein of coffee because, well, the new variant of concern that's spreading around the world has had an impact on the stock market. If we have a look here at the Standard & Poor's 500, it's, well, shaved a little bit. It's definitely taken a bit of a hit. It's at 34,899. But if we go out to 5 years, which is where we have to, we can see that big crash right there when the pandemic first started. We are certainly not near that. The market hasn't quite crashed quite yet, guys. So let's have a look at this article, which is talking about this. So stocks plunge on new variant concerns. U.S. stocks have plunged in a frantic sell-off amid growing concerns over the new Omicron COVID-19 variant. The Dow Jones Industrial Average tanked more than 900 points Friday in a holiday-shortened trading day after the discovery of a new variant of COVID-19 in South Africa jolted investors around the world. The Dow fell as much as 1,000 points at one point, but finished the day down some 905 points or 2.5% for its worst day of the year. The S&P 500 and Nasdaq plummeted 2.3% and 2.2% respectively. The massive sell-off saw investors abandon bets on the global economic recovery and pile into the basket of stocks that surged during the depths of the pandemic. So, the stay-at-home stocks, and we'll have a look at some of those. Stocks linked to global travel like airlines, cruise lines, and hotels were hit particularly hard, while so-called stay-at-home stocks like Peloton, where, you know, they've had all the tragic deaths of children on their gym equipment at home, and soon surged. Pharmaceuticals tied to drugs for treating COVID-19 traded higher as well. Ryan Dietrich, chief market strategist at LPL Financial, said the market is in a sell first and ask questions later mentality. The economic recovery has been quite impressive, and the one thing that could knock it over completely would be a more dangerous variant, he added. Time will tell how worried we should be, but investors are selling in front of potential bad news. The US sell-off comes after markets in Europe and Asia saw similar drops as investors around the world were jolted by warnings coming out of Africa about a new, potentially more infectious variant of COVID-19 that could be resistant to vaccines. Hong Kong's Hang Seng index fell more than 2% in Friday trading, and Europe's Stock 600 index closed 3.7% lower, its worst one-day drop in about a year. Oil prices tumbled too, with US crude futures almost 12% to $69 a barrel, but Brent crude futures dropped by more than $8.50 or 10.5% to $73.50 a barrel. The nosedive in global equities comes as officials at the World Health Organization said they would hold a special meeting Friday to discuss the variant, which has been stoking concern among scientists who fear it may be more resistant to current vaccines. Jeff Carborn, managing partner for Cornerstone Wealth, said the market reaction to the new variant could also be a sign that the market was overheated to begin with. Well, yeah. He said the sell-off is maybe a needed pause in this growth market to reset and get ready for year-end. The new variant has been found mostly to be present in South Africa, along with Botswana, Hong Kong, most recently in Israel and in Sydney. Officials in Belgium announced Friday morning that they've identified 2 cases of what they suspect to be the new variant as well. The US said Friday it will ban travel from South Africa and 7 other African nations by non-US citizens beginning Monday. The UK on Thursday suspended all flights from 6 African countries due to the variant. Israel also imposed no travel restrictions on the majority of Africa, and France also suspended flights from southern Africa Friday morning. In a press conference Friday morning, Israeli Prime Minister Naftali Bennett called the new variant very worrying. But much remains unknown about the variant, with much of the concern focused on its unusual combination of mutations. Dr. Anthony Fauci, the White House chief medical advisor, said Friday in an interview with CNN that there's no evidence that the new variant has appeared in the US. Without clarity on the severity of the threat posed by the new variant, investors abandoned travel stocks and have rallied amid the global recovery and have piled into stay-at-home stocks. Okay, Sectors closely tied to the reopening of global travel were hit hard, with airlines down 7% on average, cruises between 8 and 10% lower, and hotels falling about 8%. So there's an article from the Telegraph where the doctor who, raised concerns about this variant said that the symptoms were unusual but mild. So, all the patients were doing well. That's the thing. So from the doctor who identified it, they're not as worried about it. They are concerned that it's going to impact the unvaccinated and the elderly, but how's that different from anything else? So is this just a bit of an overreaction in the market? Let's have a look here at Zoom. We can see they're trading at $220, up 5.79%. They're undervalued by 61%, everyone. And we'll have a look here. I mean, it's not paying a dividend, but it's a profitable company, everyone. And we can see here everyone is piling into it on the SelfWealth platform that I'm using. It's 44th by ownership, 75th by weight, and 215th by market cap. Those that are selling have a better investment idea or opportunity at 55.6%, but those that are buying, 43.1%, say that it is undervalued. And we can see, look at that. The year high was at $486. So, it's tanked from its high. It has tanked from its high. Wow. There you go, guys. So it's up, but damn, that's a crash, guys. That is a crash. But the price forecasts are at 643. Next one. Peloton Interactive. I don't know why anyone would want to buy this with just they're lowering the cost of their product. All they pretty much did was stick an iPad on a running mill, a treadmill. But there you go. Apparently it's undervalued 83.4%. It's not profitable. It's not a profitable company. Its earnings per share are in the negative, but everyone's piling into it. Everyone in the community here. We can see selling, not happy with the company outlook at 66.7. Company's earnings potential looks good at 75% in the last 3 months. How is their earnings potential looking good? Or have they just been trained to buy these stocks when the market goes? There you go. Look at the high, 171 down to 41.13. We're sitting at $46. It went up 2%. Went up $2.40. Went up 5.67%. So I mean, there you go. Look, it's D in the ratings and the hippie rating there. What's Zoom? Zoom's C minus. There you go. So let's have a bit of a talk about this one, guys. So, is the market overreacting? Should you sell out as an investor? Now, it depends on your time frame, guys. I'm not a trader. I consider myself an investor, so I'm buying in companies that I intend to hold for the long term. I want to invest in companies that I think are not going to disappear, that won't be affected by inflation, that will be able to deal with the pandemic as it goes on. I think you're going to see more variants come out. People will start to be desensitized to the fear baiting from the media. And as these things evolve, they become more virulent. They spread more, but they're less lethal. So hopefully that will happen. And we'll have to see. Hopefully this doctor is right on the money. What do you reckon, guys? I mean, I'm not selling anything. There may be some good buying opportunities here where people are afraid of what may be declared in the news. We'll have to see what happens to the market on Monday if it bounces up. We'll have to see. Let me know what your suggestions are in the comments down below, guys. And I'd like to point you to this video about what you're doing with your money. Mortgages are so low. What are you doing with it? Are people investing it? Are they saving it? Are they building up emergency reserve buffers? Or are they just frittling it away? Check that out and let us know what your strategies or suggestions are to people. Take care, and I'll see you next time.